Good morning, YouTube. Good morning, Lee, Ad, and William. Thanks for joining me this morning, and hope everyone's having a great Wednesday. We got oil news today that Mr. Box will take us through in our trading room. But before we get a little more into that stuff, let's talk about what happened overnight, what happened in these markets, and what we could expect in terms of news today and aftermarket, pre-market earnings, stuff like that. So let's go ahead and get started here. As the S&P futures pulled back slightly overnight, about 0.5% of a pullback following the diplomatic flare-up, which adds to the concerns over the deteriorating relationships between both China and the US, these massive economic superpowers. We talked about trade deals before all this COVID stuff popped off, and now we're back at it. So it's going to be a main topic of conversation in the coming weeks as we continue to monitor what COVID-19 is doing as well. Now, President Trump already dimmed hopes of phase two deal earlier this month, saying that the relationship with China had been too badly damaged by COVID-19. Investors are also questioning whether Congress will reach an agreement to the next COVID stimulus bill before the lawmakers start their summer recess. While Trump warned the pandemic will probably get worse before it gets better, as we've seen cases in the US continue to rise. But I'm not going to dive too much into this COVID stuff because I know how much YouTube loves that. Now, in the US State Department, we have seen an order that has gone through to close to close China's consulate in Houston to protect property and private information of Americans, as reports came in last night of documents being burned in the compound courtyard. Very interesting. So we urge the U.S. to immediately withdraw its erroneous decision. Otherwise, China will make legitimate and necessary reactions. So this is what the Chinese foreign minister declared as the U.S. dollar surged against the Chinese yuan, breaking that key 7 level. So yesterday, we saw the DOJ also accuse 2 Chinese hackers of working for the government to steal terabytes of data, including COVID research, from about 11 Western countries. In other U.S. news, we also see the Federal Reserve officials set to discuss next week on how to provide more economic stimulus, as we talked about this potential $1 trillion stimulus package going through again. And a lot of people say that that is what is necessary to keep this economy afloat and keep these markets afloat. So though they have signaled comfort leaving policy on hold until they learn more about the COVID pandemic and its weighing in the US economy. So as we've seen, a lot of investors, a lot of big figures have called for another shutdown in the US, but I highly doubt that is what we're going to see unless things get a lot worse than expected. European leaders took a step on Tuesday that they have shunned for years, agreeing to issue common debt on a large scale to fund an attempt to lift member countries out of the economic crisis brought on by COVID-19. So naturally, this is on the back of Angela Merkel, whose track record on frugality and as Europe's high-profile skeptic of free handouts worked in her favor as she pushed the leaders of other nations to accept the deal. So we saw a rise in U.S. futures yesterday, but overnight, as we can tell, we did see a little slip up, and we'll continue to monitor these markets. Based on what we've seen, it seems like it's been a little overbought. A lot of the news has been priced in, but we've also got very key earnings reports coming out in the coming days, coming weeks. So we're going to see how that affects markets if there's big buying going into these earnings events, anticipating a potential beat in both Tesla and Microsoft. Now, those are the 2 big names on the radar today. As earnings season just gets going, we're starting to see those big names start flooding these news channels. And following a record number of car deliveries earlier in July, Tesla may report a 4th straight quarter of profit, which could push this already high-flying stock even higher for inclusion in the S&P 500. Now, that is the interesting part of this all. We're going to be monitoring Tesla's potential inclusion in the S&P. Now, if we see a beat in Tesla, if we see profit in Tesla this quarter, we're probably going to see a continued rally in the stock. Now, shares have jumped more than 50% this month alone, adding to the stock's more than 3 times increase this year. So, from the drop in March, we've seen Tesla exponentially grow to the upside about 4 times, I believe, something like that, as investors bet on a sudden jump in demand from passive funds that track the benchmark. So, don't forget about Microsoft as well. Much of the focus will continue to center around its cloud business amid recent trends towards remote work. So we're gonna see Microsoft report to big tech firm, and we'll see how Nasdaq reacts based on that. Also watching general equity markets along with these two stocks, Tesla and Microsoft. So earnings yesterday from some of the biggest publicly traded brokers have highlighted the major jump into retail trading over the past few months here. We've seen TD Ameritrade, which is set to be acquired by Charles Schwab, added a record just over 660,000 new retail accounts, funded retail accounts in Q2, surpassing that 608 new accounts during the first quarter. So past 2 years, we've added 1.2 million funded accounts at TD. So a record for 3.4 million daily average revenue trades are also noted, more than 4 times last year's levels and 62% more than last quarter's. Interactive Brokers, IB, that we like a lot, which additionally beat on top of the bottom line, said that the daily average revenue of trades has increased over 110% since the same quarter last year, while customers grew 867,000. They grew to 867,000. Now, while the UK and the EU negotiators began the latest round of Brexit negotiations on Monday, the two sides have remained in a deadlock over fishing rights. Now, level playing field guarantees governance of the deal and the role of the European Court of Justice, with just days to go until Boris Johnson's deadline for the outline agreement. So, senior sources told The Telegraph that there is now an assumption that there won't be a deal. So, what could happen if this should proceed? The UK would leave the bloc on December 31st by following the default WTO rules and specific agreements for certain goods. So the British government has also abandoned hopes of clinching U.S. free trade deal ahead of the presidential election in November with the natural pandemic outbreak that has been blamed for the slow in progress here, which is disturbing a lot of the peace around the world, especially around through all these deals. Now, in airline news, we should talk Boeing and United Airlines. So the latest timeline anticipates that the FAA won't finish work to lift its March 2019 grounding order until late October, early November, because the agency has decided to ask for the public comments before finalizing software and hardware changes. So Wall Street Journal reports and completing pilot training and maintenance checks is expected to stretch well into December, and only then will the MAX be ready to return to commercial service. So that means that jets are expected to be grounded at least as long under current Boeing CEO as under his predecessor, Dennis Muhlenberg, I believe, who was ousted at the end of 2019 after repeated delays in getting the planes back in the air. So Boeing down slightly pre-market 1.3%, but the earliest that we could see Boeing pumping new aircrafts out is going to be late into 2020, which may not even happen at this rate, as we've seen a pretty drastic slow in demand for flying, thanks to COVID, obviously, but ruining a lot of our flying plans. Now, United Airlines, which reported a quarterly loss about 1.6 billion to be expected at that point. Realistically, we're not seeing many airlines actually lift off, and if they did make any money, I'd be very surprised. Said it would trim more flying this quarter. So in response to stalling demand's still dropping off. No one's going anywhere, especially out of the US, right? While most cutting efforts will reduce how much cash it burns moving into the fall. Now, a lot of countries have opened up their borders for flight, but not many are accepting the US. Into Canada, I know it's only under strict guidelines, I think, like business or like necessity, some of those things, I think they're outlined somewhere. But otherwise, the US is not really able to go into many, if not most, countries in the world. Now, Lockheed Martin also cut its expected deliveries of F-35 fighter jets produced in Texas by 15% for this year and flagged delays in shipments of Hellfire missiles made in Florida because of supply chain issues. More workers tested positive and as a result were sent home. Now, student travel company World Strides filed for bankruptcy after the pandemic killed off bookings for field trips and forced the company to issue refunds, adding to a growing pileup of corporate defaults in the travel industry. Travel spending stands around 50% below last year's levels this time year over year. Now, if we go over to the markets, we've seen the S&P slip slate. That's why I'm looking to the side here, my side profile. But we're looking at the S&P 500 market that dropped off overnight highs at these 65s, 32, 65s. Yesterday, we hit that 73 level, and since then, we haven't revisited it. We broke through many key support levels, one being the previous day close at that 48, 49 level, and we managed to push all the way down to 32.27, and since then, we've rallied slightly. Where could this take us? We could start opening a lot of the downside should we crack below that 40 level, but it seems like there is the need for a pullback in this market, and you can see NASDAQ kind of tapering off, stagnating here. But if we start to see an influx in Microsoft and Tesla, that could propagate some optimism in markets and potentially see a little rise. But I'm a little more bearish this morning. We're going to see what happens. Market structure currently is slightly more bullish, but I'm not going to stick to that bias for too long if things change. Obviously, I don't know where it's going to go. I can't say bull or bear for the end of the day for the rest of the day, but current sentiment slightly skewed to the bear side. We do have some bull baked into it should we cross that 50 level, especially that pivot point on the S&P. Now, that was a quick little analysis for you guys. I'm not going to get into too many details here about oil and other assets, but if you guys like that and you want to hear more and you want to hear those trade ideas and you want to participate in a room, a community full of really good traders, come on and check us out. We're going to be jumping in that morning room very shortly this morning in just a few minutes here as I leave YouTube. Thank you for everyone that joined me this morning. I hope everyone has a great trading day. We've got oil today, oil news, oil inventory. That's going to be a kicker for us. And we are going to potentially make our whole week's or whole month's profit. Who knows, in one day. There's a lot of opportunity and it has that potential. So if you guys want to learn more about that, come join us at TRADEPRO Academy. Take care, everyone, and I'll see you guys tomorrow.